All right. Happy Friday, everybody.
Friday.
We'll give everybody a couple of minutes to get logged in, and then we will get started. All right. While we're getting started, or while we're waiting for everybody to get logged in, Larry, can I ask you a quick question?
Sure.
Oh, I don't want to do that one, but while everybody's getting logged in, I'm gonna pause on it.
Okay.
And we'll do it a little bit afterwards. Rob, you want to tell everybody where you're at today?
Well, hold on. There's a question in the chat room.
Don't ask it. Don't ask it.
Mark.
Mark.
And that's not
Mark,
a question that I would ever ask.
Mark, I'm trying to catch up to you, Mark.
Oh my goodness.
Yeah, I'm in the unglamorous Austin. See, Austin was earlier this week. Orlando Airport, looking at a nice view of some thunderclouds. But Melissa, I forget. Did I promise not to sing you happy birthday, or promise not to mention it was your birthday? What did I promise not to do?
Doesn't matter now.
Okay, well, let's just say I promised not to sing you happy birthday.
Okay.
There you go.
All right.
Happy birthday, Melissa.
Happy birthday.
Thank you.
And so you said before the show began that you're going to an escape room in Austin.
Yeah.
Is that something you wanted to do for your birthday?
Yeah, it's something that we do as a family all the time. It's kind of good puzzle solving and, kind of family bonding. And yeah, so we like to go do that. And it's a short, like condensed period of time. So you can get it all done in an hour.
Did you ever read or see the movie, The Da Vinci Code?
I did.
So I've never been in an escape room. If you fail, do you lose one of your children or a husband or something that they never turn up again, or
no,
it doesn't turn deadly?
In the South, they might go, bless your heart, but they, for the most part, they try to set you up to be able to get out in time. Yeah, there's no firstborn children, firstborn son that you have to give up or anything like that. It's just fun.
I'd like to give up my firstborn son sometimes. Anyway.
Oh, no, you would not. No, you would not.
No, I would not.
Go ahead and get us started. Thank you, everybody, for joining us. Happy Friday to all of you. We are Rob Chrisman. Thank you for joining us. Larry Bsharah.
Yep.
Did I say it right? Okay. Thank you so much. Larry is here to join us. He is the president of John Adams Mortgage and Total Home Lending. And we have some really great things he's going to share with us today. Before we get started, if you have not already, make sure that you subscribe to our YouTube channel. And you can also kind of follow us through the TMC Connect, searching for TMC Connect in your podcast as well. I would love to connect with you guys and have you listen to us there if you cannot join us live. But okay, let's go ahead and get started. Larry, why don't you tell us a little bit about John Adams Mortgage and Total Home Lending and this amazing relationship that you have with Real Estate One.
Yeah, so thank you. Thanks for having me, Melissa, and good to see you, Rob, and everybody. John Adams Mortgage and Total Home Lending is owned by Real Estate One. Real Estate One is our family of companies, is a third generation family owned company. And the real estate side started back in 1929 by the current owner's grandfather, Staunton LC. And then around in the 50s or so, the current owner's father started in the business, Mr. LC. And in the 70s, decided it would be a good idea to have one-stop shopping. One-stop shopping, meaning a mortgage company, a title company, an insurance company. So in 1972, he started the mortgage company. 1973, he started our title company. and in 1975, a property and casualty company, insurance company. And over the years, it's evolved, and we have investments company, we have a rental management company, and in total, Real Estate One has about 1,900 real estate agents. And on the mortgage side, we have about 92 employees plus other employees as well. So things have
Nice.
evolved and changed over the years for sure.
That's very, very cool. That's a great story. Larry, I had a question about warehouse lending.
Okay.
That's a concern. Liquidity is always a concern. The quickest way to cut off a vendor or a lender is to cut their liquidity, namely through the warehouse line. And a lot of lenders right now are looking at their P&Ls over the last several months or several quarters and not seeing a lot of profits. There's a lot of red out there. When a warehouse lender looks at you, and you don't have to go into too far into the specifics because you're a privately held company, but when a warehouse lender looks at you, do they look at your other business lines and include those in the total P&L? And if so, cool. If not, cool. But how are you dealing with this warehouse environment where, for example, Comerica has left and you're looking for a replacement? What's the attitude that you're seeing with warehouse lenders right now?
Yeah, so yeah, we had Comerica and we also have M&T Bank, both terrific partners. The unfortunate part with Comerica was a banking issue, I think, not a warehouse lending issue. But so we're going through the process of finding a replacement for Comerica, and they look at just us on our own merit. They don't look at the entire family of companies. And one of the things that we're going to be talking about a little bit more today too is about relationships. So one thing that we have found is when you have a strong relationship with a warehouse bank, they understand your track record, they know your track record. And when you're looking at a new warehouse lender, they look for different things. But I think any of us on this call, or as an independent mortgage banker, you need to be able to show strength in tough times. And that's what we're able to do. And that's what I'm sure many of the members are able to do because of how long you've been in business or the strength that your P&L show or your financial show or your net worth shows. So they do look at things pretty aggressively, but I think when you're able to stand on the merits of your financials and your net worth and your strength in the industry and how long you've been around, I think that speaks volumes. For us, we've been around 50 years, so we've seen a lot of different recessions and wars and you name it. So
I was just going to say, so your tenure in the industry must really be a benefit, whereas a lot of lenders, I would say, haven't been around more than 5 or 10 years and don't have that history to use. What's the shopping list like out there? What's the selection list like in terms of warehouse banks that are going to replace a Comerica for a small to mid-sized lender?
Limited. It's very limited. There's a lot of great companies out there, but as much as they're interviewing us, we need to interview them as well. I mean, there's companies, banks out there that from a warehouse lending perspective may not make it on their end either. So we have to do our due diligence as well and check them out. But the choices are slim, but there's still a lot of very good companies out there.
Yeah. So it's not like the the joke about the woman who moves to Alaska where the odds are good, but the goods are odd kind of thing.
Haven't heard
anyway. What, you hadn't heard that one?
No.
No.
I thought you were going to say something about, the last one that leaves turn the lights off or something.
No. About the life of a single woman in Alaska where the odds are good, but the goods are odd. So
okay. I'm gonna read.
I'll be here all week.
Can I get us back to mortgage?
Anyway,
so back to you guys.
So, Larry, so I'm coming off of time in Austin, Texas, where building is. We were talking with Melissa. Building is going gangbusters there. Residential units, especially on the west side of campus, where I still own my son's condo there. It's just skyscrapers going up in terms of building, and I was riding a scooter. Actually, I like riding scooters, Bird or Lime or whatever. And I was riding one Tuesday afternoon because it was so hot and I didn't want to walk back. And I'm looking around, scootering down the main drag, and I'm thinking, man, there's a lot of building going on here. And the campus and the school obviously can absorb some of that, but obviously inventory is a huge issue. It certainly was a discussion topic here in Orlando, Florida, at the Florida Association of Mortgage Professionals event. Are you, we've got this double whammy of interest rates staying high, no inventory. How are you encouraging your originators, if at all? I mean, what kind of mindset? I understand probably what kind of mindset they might be in, but how are you seeing them through this tough time?
Well, it's not easy, but you have to keep them encouraged from the standpoint of helping them out, giving them ideas, giving them support, any lead possible, try and disperse out to them. We need to be salespeople too, helping them with their realtor relationships and going into their offices more and helping them speak to realtors, both inside their real estate offices and external real estate agents. But just continued support. Every year we have a slogan, so to speak, that we live by. And this year was to, from a company standpoint, to retain, recruit, and support. And so we wanted to retain those loan officers and operations people that we have. We wanted to recruit more. And from an operational standpoint, we wanted to support the loan officers, fast closings, good quality underwriting, et cetera. But also operationally support one another. So it's just an all hands on deck mentality, and not assuming anything. We don't want to assume somebody's doing okay because they just came off of 2 great years. We don't want to assume that even though they say, yeah, I'm doing okay, well, you just want to always check up on them. And so just constant support. That's really what it boils down to.
Yeah, you always have to look beyond the headlines. And when my mom was alive, I'd say, Mom, how was the hamburger? Fine, which was basically the kiss of death. Fine. Well, that meant, lousy. But that's pretty neat that you have a slogan a year. I have the same thing where year after year, my slogan is, Rob, get your lazy butt out of bed at 4 a.m, which sometimes that works, sometimes it doesn't. But yeah, have you had a lot of pressure from originators in terms of bringing new products on board? The, Fannie Mae, Freddie Mac, FHA, VA can only go so far. Now it seems like originators want like the whole rainbow of products. How do you determine what makes sense and what doesn't? And how do you, what kind of input you get from originators on that?
A lot. When we ask realtors too, what they're looking for and what they're seeing and hearing out there. I think in a market like today, you need to be able to offer everything, even if you're going to close less than five of those that type of loan a year, whether it's DSCR loans or any sort of non-QM bank statement products. We need to be able to offer all of that, because similar to us getting approved in other states, which we are now approved in 7 other states, even if it's one loan that originator can write an extra per year, it means a lot. It means a lot to them. So that goes to the support aspect of being able to support them, being able to talk to referral partners and realtors about all these different products, a suite of products that they might have, that we have, that they can offer. So it's very important to be able to offer all of those, even though you do very few of them.
Well, it helps the realtor too, right? They have one place they can go instead of knowing, I can go to John Adams Mortgage for this, but I have to go to XYZ for something different.
Yeah, we don't want anybody else in our, I call it, I don't want anybody in my kitchen. I don't want anybody inside our walls, if at all possible. So if the more we can offer, the better.
So go ahead.
Sorry, Melissa, go ahead. No, go ahead.
I was going to say, so you obviously have, being a part of a real estate company, right? You have this kind of captive audience of realtors that are just ready and willing and able to send you all of this business, right? It's that easy, isn't it, Larry?
Oh boy, no, it's not. The perception is that we sit back in our office, feet kicked up and getting all these leads that come in. That's the perception that people have. But actually we welcome this. What I'm about to say, we welcome being part of the Real Estate One family of companies, and we are held to a much higher accountability, and we have to show up every day. It's not listen, being a captive loan officer and not a captive loan officer comes with challenges both ways, but I would never change it at all. I would never switch that at all. And it comes with a lot of hard work. We do what non-captive loan officers do every day. It just happens to be within our office, and the relationship. That's what our business boils down to, is the relationship. We were talking about it, Rob, with the warehouse lenders. Same with realtors. If you have that relationship, you're going to get the business, whether it's captive or not captive. And so it's really important that our loan officers are working hard at those relationships every day. And it's not easy, but I wouldn't have it any other way.
Melissa, along those lines, I know that Bay Equity, which was purchased by Redfin, it is a constant monitoring of how much Redfin business does go to Bay Equity loan officers. And it's the vast majority of Redfin business goes elsewhere. And so you'd think, oh, it's such a layup for Bay Equity to have been purchased by Redfin, and they're going to get all of Redfin's business and it'll be coasting on Easy Street. But no, it's a constant battle. Loan officers have to continually prove to the agents. It's almost like two different companies entirely, that they deserve the business. Larry, I wanted to ask you, so many lenders have very strong accounting departments and CFOs, very knowledgeable financial staffs. How much input do you receive, or the production staff receive, from them in terms of, gee, this bond program just isn't profitable, or this down payment is, whatever it is, isn't working out? Does accounting ever join in, or what kind of expertise do you look at from the accounting side of the equation?
Quite a bit. They look at it from a non-mortgage standpoint. Sometimes they look at it from a practical standpoint. Business is down X%. Shouldn't our personnel be down X%? So they look at it from a very practical standpoint. So same thing with our accounting, our CFO. We have a really good relationship, and I think it's important that it's a conversation that's had regularly, because I might miss something. I might not see something that they're seeing, whether it's an expense or a product or revenue from a certain program. So I think it's important that there's that communication, and ask a lot of questions about getting that help, because they're the expert in accounting. I'm certainly not, but I can give them the mortgage side of the argument on why we have to offer a state bond program that might have less margin than an FHA loan. So yeah, I think it's very important.
Now, I understand that I may see you in Michigan next week.
Yep.
Which would be cool. In terms of and there'll be a lot of vendors, obviously, at the Michigan event. How do you bring a new vendor on board or change an existing vendor? What is there a standard process that you have, or somebody in the lunchroom says, oh, we need a new LOS, and away you go? How does that process work?
A lot of vetting. We have responsibilities to our regulators to manage our vendors. So we do a lot of vetting up front. We get testimonials. We ask friends in the industry what they're doing, or if they have experience with a certain vendor. But bringing on a vendor is very important because of costs today. So we got to look at costs and make sure we're not duplicating or having an overlap in a certain area. One thing we vet all the time, we did vet before we made a decision, is our point of sale system. And so you can make a very expensive mistake. I mean, we're vetting warehouse lenders right now. So you can make a very expensive mistake if you don't vet properly. So
if a vendor wanted to give you a sales pitch, what's the besides going to the MMLA or Mortgage Collaborative event in Nashville, fast approaching, it's already next month. What's the best way for a vendor to do that? Just get a hold of you and say, hey, I've got an LOS you should take a look at, or I've got a lead management system you should take a look at. Give me a half an hour of your time.
Cold calls are tough to break through with me. I want a warm lead. I want to be able to say, hey, I'm looking for this type of product or this, and be the one to start the outreach. It's rare that a cold call or an email will catch me at the right time to be able to look at them. So I think just meeting somebody at a conference, me being able to be the one to go up to them and say, hey, we're looking at an LOS, which if there's any LOS vendors on this call, we're not looking for one. So don't blow up my email. But so it's important that we're the ones that I want to be the one to approach a vendor.
Yeah. Well, watch out now, Larry. Every time now the next conference, when you saddle up to the prawn table, you'll be descended upon by all the different vendors out there.
Times are tough. I don't know if ever anyone will have a prawn table. Maybe.
Well, cheese and crack,
sliders. Maybe sliders.
Ritz and Costco cheese packs will suffice. How are you guys dealing with the? Now I know. And none of these, Melissa, I've blown through some suggested questions. I know this, but Larry, without you, Larry, putting yourself too much out there or too much on the hook, Fannie Mae, Freddie Mac, especially Freddie Mac, definitely in the industry's face with buybacks. Fannie Mae made $5 billion in the second quarter. Freddie Mac made $2.9 billion in the second quarter. The agencies are doing just fine, but there's a lot of agency pushback in terms of buybacks, frankly. And I'm not asking you for your statistics, but I would assume that at some point along your career path, you've been confronted with a repurchase possibility or more than one repurchase possibilities. What are you hearing about that environment, and what are you hearing lenders doing about it, if anything?
So I have heard there's been a huge uptick. We've been very fortunate. But the most recent buyback request that we had was with a certain investor, and we really knew we were right, and they kept denying our rebuttal. And we asked twice along the way to go directly to Fannie and if we could bypass the investor. And they swore up and down that no, we're going to handle that part. We're going to handle that part. And it kept being denied. Well, finally we broke through and they agreed to let us go directly to Fannie. And it took Fannie 2 days to prove that we were correct. So I guess my only suggestion to everybody is to try like crazy to go directly to Fannie or directly to Freddie and bypass the investor, if at all possible. If you're getting some pushback or denied rebuttals on their requests to buy the loan back, because sometimes that works. Sometimes that works. So just keep pushing. If you know you're right, put together a great rebuttal. We have a great team here that knows what they're doing in that world. So so my only suggestion is to keep pushing back and try and get direct to Fannie or Freddie.
Good answer. Very good answer. So Melissa,
Yes, sir.
Larry, unfortunately, they have called boarding group 16. And so I need to go, but we should keep things in perspective. I'm going to swing the camera around here briefly while you guys continue your call.
Okay.
And just say that, fortunately, no one on this call is working in the Orlando airport on a tarmac when it's, 90 degrees and 90% humidity. We're all in air conditioned offices, but I do have to jump.
Okay. Thank you for
So
joining
Larry,
us.
thank you, Larry. I hope to see you next week.
Hope to see you next
Carry on,
week, Rob.
Obviously. All right.
All right.
Larry, before we go, one last question for you. Obviously, this week there's been a lot of kind of rumbling around, kind of a change in strategy, so to speak, for Rocket. You talked earlier today about trying to, make sure that your family all stays together. What do you think about this? Is this going to change anything for you or your strategy, or do you see it being, it making an impact at all?
Well, one of the things that we talked about a little bit today was relationships and relationship. We're in a relationship business, relationships with our realtors, our referral partners, and is great of success that Rocket has been over the years. The one piece that they've been missing is that relationship with realtors. They've survived on very low rates and refinances, and trying to reach out to loan officers in a given market makes sense. But their success is really going to depend on the execution of the transactions and what realtors and loan officers feel about Rocket in that given market. Rocket's 20 minutes down the road from where I am, and they don't have a retail presence at all here. So it really depends on how they execute that. Again, it makes sense what they're doing, but our business is all about relationships. And if you don't have that relationship with a realtor, which we take a lot of pride in, it means nothing.
Yeah, it's really interesting to me because they have their TPO division too, right? So now they're kind of going to be competing against each other a little bit in each of the markets that they're looking at. So it's that part is very interesting. I think about like pricing and all of those sort of things of the just complexities that are going to come their way as they try to pull this off. So
they're trying. We'll see what happens, but they'll have a struggle. They'll have a challenge for sure.
Yeah, I agree. Well, I wanted to say thank you so much for joining us today. I really appreciate all of your insights. You've shared some fantastic nuggets for all of us. Before we go, do you have like huge plans for the weekend?
Probably. I'll have to check with my wife. but no, I don't have a birthday to celebrate like you do tonight, but I'm sure we'll do something.
All right.
But thank you for having me. You guys are a wonderful group and happy to be a part of it.
Absolutely. Thank you for joining us. I really appreciate it. Thanks everybody for being a part of our Friday. I know everybody's busy and appreciate you spending your half an hour with us. Look forward to seeing everybody next week. Have a great weekend, everybody.
Thanks. See you later.